Welcome to the Productivity Podcast. Diane Worrell, CEO at Rendell Intelligence and Insights, joins me again for one of our monthly chats. Hi, Di.
Hi, Simon.
How you doing?
I'm good. How are you?
Yeah, good, thanks. And we're motoring along through the year now, so we're into September to October 2024 insights and results. So how are we faring?
Well, I would like to say that it's sort of on the up, but I think we're sort of got to a bit of a plateau, really. We had a lot of concern amongst consumers, sort of pre-budget, post-budget. And I think in October that sort of leveled out a little bit. So sales, and that sales in towns and cities across all sectors dropped 1.8% year on year, but that's better than the September result, which was minus 6.5% drop. So things did start to sort of stabilise. Footfall was 1.1% down in October. So that's footfall into stores across the three channels: high streets, retail parks and shopping centres. But it was much better in September. It was more positive in September. It's 3.3% up year on year. So one's going up, one's going down. But, we're at a point where it's not fabulous in October, but it's not disastrous either.
And lots kind of happening in that period, wasn't there? So there was the build up to the budget, which potentially makes people nervous. The forthcoming at that point American election as well, which might not necessarily have a direct impact, but again makes people think about what it looks like and how we interact with them. Yeah.
I mean, I think there was a lot of nervousness around the budget, pre-budget and post-budget, and I think in October that settled down a little bit. Interestingly, GfK, who produced the consumer confidence numbers, they work on a mid-month cycle. So their results for November came out recently, and of course that covers sort of October through to November. So it's not a 1st to 31st cycle. Consumer confidence, as per their November numbers, actually improved a little from minus 21 in October to minus 18 in November. So there was a little bit of improvement, but we're not back to where we were in August around consumer confidence, which was minus 13. I mean, it's still not good, it's minus, but it has stabilised a little bit. But we're sort of in, as I said, in this plateau place where people don't feel incredibly confident, but they don't feel like they're falling off a cliff either.
And do we expect that to kind of continue now that we know about it primarily affects employers, not employees in its purest sense, but the national insurance changes, national living wage, or can people see that that's going to put pressure on their employers to maybe start to think differently?
Well, I think there'll be sort of a game of two halves, really, isn't there? There's going to be some people who don't really think about it at all. And there are some people who will recognise that if their employers have a higher overhead, then that's likely to impact on their employment security. And I think we see it quite clearly, actually, in the savings ratio, which is quite a good indicator because it's an underlying indicator of how much we're stashing away for a rainy day. And the latest numbers are for quarter two, actually, this year, but it's the highest it's been virtually since the pandemic at 10%. So people, and it was 11% in quarter one. So people clearly are feeling they need to replenish their savings, probably because they spent quite a lot when inflation was high and interest rates had gone up. So whilst they're in employment, they're feeling cautious. And I've actually put a forecast out for Christmas trading period that's actually available on my website, plug. But really, I'm saying this is going to be a cautious Christmas. I think people are not sure of what is going to happen, and they're trying to replace their savings they lost. Obviously, they want to give themselves a good Christmas, so they'll still buy food and they'll do the Christmas lunch and all of that stuff. But I think people aren't going to be spending huge amounts on gifts and splashing out and having this incredibly luxurious time. They're going to be quite cautious around what they're spending.
Which doesn't help then, I suppose, fuel some of the stuff that potentially we could see post Black Friday and Christmas, where these changes that are going to hit employers really start to kick in. Probably going to affect jobs, probably going to affect number of hours, overtime, or all that kind of stuff. So it feels like it, certainly in hospitality and retail industries, it's going to be a very significant time period for some organisations.
Absolutely. And of course, you've got this hiatus in the middle where organisations have an increased overhead coming down the line. And yes, they could try and veer away from that by investing in IT and better tech to support the business, but that's not an immediate thing. And of course, capital investments required for that and where they get it from. So people, I think, will probably be okay over Christmas, not but aware of what might be coming down the line in the new year, and just be very considered around what they buy in terms of gifting. Black Friday this year, fortunately, and at the time of this, we're recording this, it's Black Friday week, so we're leading up to it now, is on sort of the last Friday of the month, whereas last year in 2023 it was the week before. So for many people it's going to be payday, which is good. So that will enable them to have budget to spend on Black Friday and over the weekend, which I think a lot of people will make the most of that to try and get some good bargains and try and capture those gifts that they can at a lower price. But then we're likely to see this lull coming through in the next couple of weeks after Black Friday before it ramps up just before Christmas.
Yeah, so I think we've said it before, haven't we? There's probably all to play for. Deals are going to be, I think, probably quite good actually as people look to stimulate sales growth. But it's going to be really interesting, isn't it, as we come out of Christmas. January is normally a tricky month anyway, whether people paying off bills, etc., from that period, and then start to head into the spring with how this really impacts everybody. It's an employer's tax or rise, but ultimately it trickles down to the employees at some point. So
absolutely, and quite quickly, I would imagine. If an employer and a small employer has suddenly a much bigger wage bill coming down the line, it's definitely going to restrict recruitment and possibly the size of the existing workforce. So once the Christmas period has finished, and I think that's the big thing for most companies, isn't it? It's get over the Christmas period, particularly in retail. It's about let's make sure that we can sort Christmas, and once we've sorted Christmas, then we'll deal with it.
Yeah, and that as well as hospitality tends to influence the start of the new financial year and that run through, whether it's January financial year or April or some later in the year. That whole period shapes the rest of the year, and in some organisations is the difference between profit or loss. So yeah, interesting times. It'd be interesting to see where we head when we do. Where are we? October to November, and then clearly we've got the big one that we'll do in January, which reflects on Christmas. So again, still feels like there's all to play for if we're casting a positive note on it, and that should drive some, as consumers, good deals and bargains, hopefully, as people look to just stimulate sales.
Absolutely.
We'll pause there then, Di, and fingers crossed we get some positive news in the next catch up.
Yep, let's hope for that, Simon.
Great. Catch up soon.
Thanks. Bye.